Hello, this is the Chart Profit video. We're about 90 minutes into the trading day on Friday 2nd of September. Looking at the EMini S&P until late in the trading day on Thursday. Yesterday our major support, the 4-month point of control, was at 21.5850, which is this red line here, and in the last 5 days we've seen two tests of that level, two rejected tests of that support, which so far has held really well. No value areas here were printed below that support, which is good. I was saying that price below 21.58 would be a real concern. We haven't really seen that at all. What happened yesterday late in the day was enough time was spent at 21.67 to lift the 4-month point of control to that level. So this is 21.67, which is now the 4-month. That's the main support resistance. These two levels may or may not provide support resistance now, as the main point of control has migrated to that point, 21.67. So that is now, as I wrote pre-open, the most important level to monitor, and price relative to this level will indicate strength, weakness, with the other levels confirming. Looking here at a live 30-minute bar chart of the EMini. Front month September, not for long, hasten to add. Here's 21.67. You can see the price action there meant enough time was spent there to lift that point of control to that point, and we're up quite strongly following jobs data. We're up quite strongly today, up to sort of 21.83. Looking here at the breadth indicators for the market chart, daily breadth indicators through Thursday. These two indicators here holding above the levels, which give us a green bar on the pulse chart. You can see here the net new high is 25, 5-day moving average holding above 0 just, and the percentage stocks in my New York list holding above the 50-day moving average, that number above 50, giving us this green bar, continued ongoing green bar for supportive breadth on the pulse chart. At the top here we're looking at the spider, and you can see the market has been in quite a range since early July. Very low volatility thus far, a lack of directional bias. We've seen the momentum come off. It has been holding above 0. We actually just dipped a little bit of red here on the momentum below 0. And we said many times that when this indicator from an elevated position turns down, it has a tendency to get back to 0. We see it quite often. Not always, but that is a typical pattern with this indicator. Very often you'll get a better entry when it returns to 0 on the long side than you would have done when the indicator turns down. Again, it's not always the case, but it often indicates there may not be too much upside in the near future. And the first sign of weakness anyway on the EMini here, 21.67. As long as the EMini holds above that level, it's in a strong price location. We'll look at the stock indices, ETFs very quickly. I've noted on the chart some more minor support levels that are developed. For instance, 216.33 on the spider. That's the 3-month point of control built in here, and we've actually just seen support at that level and popped up today. So first sign of weakness would be price printing time back below that level. That would indicate a retest of 209.90. We're safe at the moment. First level support for IWM, the Russell 2000 ETF, is now 119.57. That's the 3-month. On the diamonds chart, the 4-month has migrated to 185 dead, printing almost exactly at that level now. If we see more upside next week, possibly breaking out, this would be the support level, quite close at the moment. This is a FTSE 100, UK FTSE 100 chart. I've actually shown this level, 67.23, the 4-month. We've shown this level in the webcast last couple of weeks as first level support. Very clearly there was support this week on Thursday, right on the low of the day, and having a very strong update today, the FTSE. We noted last week how the DAX, the German DAX, was printing very close to its halfway point from last year's high. We have held that level, not much upside at the moment. Sometimes a halfway point like this, if you see a high or low, connects as a bit of a springboard. We haven't really seen that. and price back below that level would be a warning. But I've noted that the 3-year value area high, 3 years covers quite a range that we've been in on the DAX, and the large distribution, the value area high comes in at 10,742, and we just probed that, and currently it's kind of holding or limiting the upside for the DAX. Now what can happen in a situation like this, and we can see it on other charts, is that the point of control here, 9750, which is associated with these two, value area high, the value area low, this potentially could move, it could migrate higher. So more time here or even a little higher could migrate this point of control upwards, and these value area high and the value area low would correspondingly shift, I'm pretty certain, higher, and that may release the upside if that's what the DAX is going to do at that point. So we need to monitor this quite closely, and where the DAX is actually spending time, and does this point of control move. There's actually something similar going on the gold chart, GLD, at the moment. For the last few days in the pre-open under bonds here, TLT, I've been noting that for 3 weeks now the chart has found resistance to every probe above 140.30, the minor half range of the July high. I've said that price above that level would be a positive. So here's the level, 140.30 here. These are all the probes above that level that have been rejected. Halfway point comes from that high to that low, and we're still in a weak price location here. Price back above that level, doing this kind of thing, would be a strong location, but we don't see it yet. So a bit wary here about the bonds. On USO, this is the oil fund ETF. Interestingly, we've had a point of control at 1078, previously the 18-month. Enough time was spent here, across this point here, to now call this level a major point of control. So really important for oil bulls that we see price back above that level. Currently we're in a weak price location here, but finding support, possibly temporarily, at the halfway point off this low. So that's what's happened, weak price location, but currently at support. Now if that support holds and the oil ETF finds itself back above 1078, that would put it back in a really strong position. But right now, again, a little wary about oil, especially if this ETF is printing down here below that halfway point. That would suggest definitely further weakness. Here's the GLD, the gold ETF chart that I mentioned earlier when looking at the DAX. Similar kind of situation. The 3-year value area high comes in at 129.94, and that's been probed and rejected. And again, the major point of control corresponding to that value area higher is 118.22, and that could migrate higher. Time again anywhere within here or possibly here could shift that higher, and that again would send this value area higher and possibly release some upside. But that's what's capping it at the moment, is this value area high. In the near term, we're looking at slightly oversold situation here on the dailies. Looking at my relative strength index with the Bollingers here and the stochastic momentum. So this is a longer term uptrend that we're seeing. This would be ideal points for GLD to turn around and start heading higher and hopefully lifting that point of control. And here's the dollar index. The 2-year point of control at 94.76 is here. We had a big probe of it for quite a number of days when it was in a weak position. It's worked its way back into a stronger price location, the dollar, but it is, once again, we're looking at a major halfway point here off the high back here to this low, and that is currently resistance. In here, kind of unclear, below 94.76, weak price location, and probably see more downside. And if the index can get above this halfway point, we'll probably see more upside. And we'll get clues from these charts. This is a Euro FX chart. This is currently sitting in a reasonably strong price location and finding support at its 4-year, which has just migrated very slightly to 111.39. So that, again, as we said last week, this area here is a band of support. Price below this level, price below 111, would be weak. Good for the dollar. Currently just printing just above that level. This is the pound dollar. Here's the Brexit collapse. A minor point of control has emerged at 131.37, and the pound, as of today, is currently printing above that level, sort of up towards its range highs, but in a strong price location above 131.37. Price back below here would obviously be a negative. Just finally on the Forex chart, we're looking at the Aussie dollar here, and this area that we've looked at between the 4-year point of control and the major has been probed over here, obviously, and here what we're looking for is a very clear high or low. That would put the chart in a position to really find its feet, but currently we're still struggling below in a weak price location. So I'm not tempted on the long side of this chart until we see this kind of pattern. Quick look at the sentiment indicators. My version of the RIDEX assets ratio was lower at 7.14. A week ago, the ratio reached 7.9, which was a 7-month high. That was here, and I'm noting that thus far the S&P hasn't been any higher. RIDEX bull fund assets in isolation, you can see on the chart here they also hit a multi-month high at that point. Nothing massively elevated like here, but a multi-month high. And bull fund assets recently very low. Last time they were this low, back over here and here. Often a warning for the market, but I see no indications of price or structural weakness in the profile. Still looking for effective selling. If you follow the pre-open day-to-day, you would know as soon as that happens. Public poll from AAII, bulls percent was slightly lower at 28.6, bears percent was higher at 31.5. I follow the 4-week moving average, the black line of the net, bulls minus bears. Last kind of significant event on here, the most recent significant event, was when that 4-week moving average just peaked above its previous peak and hit a multi-month high. Bullish sentiment in the investors' intelligence poll is still increasing. Admittedly, the bulls percentage was actually slightly lower this week, with bears percent almost unchanged, but the bulls percent last week, as we noted, at 56.7, that was the highest since May last year. 2 weeks ago, the bears percentage fell to 20%, which was a 12-month low. The 4-week moving average of the bulls minus the bears, that's the black line, at 35.35, that's the highest since May last year, just here. Lipper US fund flows reported equity fund, including ETF outflows this week, the week to the 31st of August, 748. It says billion. I will change that. For the ebook, it's actually million. It's not a significant flow, but you can see again on the 4-week flow here, the black line just hit a peak or a multi-month peak at this point. But you can see from the fact that that 4-week flow is still below zero, indicating, as does the RIDEX data, that although kind of retail investor sentiment is hitting reasonably high bullish extremes, nothing like euphoric levels. To look at the long-term picture, this is from last week, or previous Monday's ebook. Even here in the Spider weekly structure, we saw previous week sellers active but ineffective. We're looking for effective selling on this time frame. Certainly not going to see it this week, I wouldn't think. And that would be the first sign of weakness on this time frame. And through Friday the 26th, a week ago, you can see that our market charts for New York, Nasdaq, etc., all solidly green down here. So that's where we are at the end of the week. First sign of weakness comes on the EMini below 2167, holding quite comfortably at the moment above that level. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.